But it was sort of this trifecta event between stocks being sold, the dollar being sold off, and of course the bond market all going down at the same time, which rarely ever happens. It's usually an inverse relationship between those. Typically, if you see a pullback in the markets, you would see a rise in the dollar. But in this case, we've seen all three tumble at the same time.
But that sort of peak bad news happened exactly when we bought them and then we turned to the other side. Because the sellers get exhausted, and then as the price moves the other way, you have calls that go into the money. They end up becoming more valuable. People chase the calls to the upside for protection, for the short positions. Then you get basically buyers in the market for the upside, calls from the market for the upside, gamma to the upside, and short covering. And then you get this huge bounce up. So I think it's totally possible that we actually overshoot that 200-day moving average and actually tip to all-time highs. I think it's like that it could just peak over there and then actually roll over. What's my proof? Bitcoin. Right?
Yeah,
Bitcoin was at 74,000 and we had a 22% move off the lows, right? Mm-hmm. And this is over 20 days. I mean, no time at all. Why? Because all of the short position that was there that got built up over this down period, all the short position that got built up over here, then needs to cover. Right? They get just liquidated, just get massively liquidated all the way up over here. And there was billions of dollars worth of position in short versus just millions of dollars worth position in long. And we've talked about this on After Hours a few times before. Like when those positions are short, they have to at some point cover. There's no such thing as this position not covering because they need to buy back even just to capture their profits. They have to cover the position. And so you get this run up, you get this liquidation that runs forward, and then you get the market that goes up 30% in 20 days, which is unbelievable. And the number of people who thought that this was not possible, right? People are calling for 62,000. And we were on a couple of after hours ago, 62,000. The likelihood is that we move up, and that's exactly what happened. And so I can expect a move just like this in equities.
I think
run up.
We had covered a couple of those support zones on Bitcoin in previous episodes where I had called for the potential of, what was it? I was hoping for about 74K on Bitcoin, and that indeed ended up being the wick low on a couple of those days there. Now, the short squeeze on Bitcoin makes sense to me. I honestly think that we experienced most of the short squeeze in equities, though, already on April 9th. What are your thoughts on a continued sort of rebalancing of bears against bulls?
Well, what happens is that the options market in the Bitcoin space isn't nearly as robust as inside of the equity space. Right. So what happens is that it's more straightforward in the Bitcoin space, the actual short positions in perpetual futures contracts, or even just, spot positions. And so it's very clear to be able to make out what's happening. And there's not much gamma because the NASDAQ is the NASDAQ and the options on the NASDAQ are the options on the NASDAQ. It's not spread out across multiple different exchanges like it is inside of the crypto space. The liquidations for crypto is linear, right? If there's $4 billion that needs to be bought back, it's $4 billion that needs to be bought back. Whereas in the equity space with the gamma, you can have people who end up actually making more money than the difference, the delta from the lows to the highs, because you have this asymmetrical payout on the option structure. And then those people, when they monetize those options, can then reinvest that money back into the position. So you get way more of a move, which is why you get more of these overshoots inside of equities than in Bitcoin, where you get literally, it'll move from VWAP to VWAP to VWAP to VWAP to support to support to support, almost like it's like a ping pong ball, whereas you get these swings with equities. And so it's all that's would really be required is that we're in a window of some sort of support, which is whenever we're not at quarterly expiration, we're in a window where there's going to be upward pressure on the price. Because the only thing that really exacerbates the price downwards is that gamma, is that negative gamma. If you don't have that, it's very hard for the market to go down because you have passive investment flows, you have pension funds, you have all these things that are just pushing the price up.